Good evening, grinders. Happy Halloween to you. There's one thing that I want to tell you, and it is on par for the month of Halloween. And that is don't be scared because scared money don't make money. In the month of September, everyone was expecting the stock market to be down. Historically, September is the worst month in the year. But we actually did have a positive September. So, of course, the talking heads on CNBC and all the news channels were trying to conjure up like they're a witch creating a brew or whatever the witch is put in that cauldron or whatever you want to call it that they have. They were trying to cook up a market correction. We talk about an AI bubble. Um, we got Trump sending angry tweets to China because China decided to restrict its exports of rare earth minerals. We got a couple of things: the Fed and whether they're going to cut rates. We have the government shutdown. All of these things to spook the market, to scare you, and we can even look at it. I'm not just talking off the top of my head. Currently, even right now, at all-time highs in the market. A month ago, we were in neutral, just saying that, all right, their money invested, we're feeling, I'm not too nervous and I don't feel like I'm too greedy. I'm not just throwing money into the stock market and everything's going up. I'm just neutral. But we see right now, we are still in on par for October for Halloween in fear territory. Although tech stocks reported this week, the big bad boys of the market reported this week, and overall, it was a great report. Things are going well for some of the best companies in the market. And yet, the stock market itself, the participants in the stock market, still feel a little bit uncomfortable. But I'm here to tell you, despite that negative sentiment, you must remain invested. Because again, scared money does not make money. You have to take calculated risk. Do your research. And of course, join our Patreon. You can join for free or you can join for $10 per month. With that $10, you'll get all of our strategies and secrets in the All In Society playbook. You'll get a little bit more hands-on approach. You'll be able to ask us questions directly. And then you'll get our real-time trades. As soon as we drop the trades, we will be posting and sharing them with you guys so you can jump in and jump out with us. All right. So let's look at the overall market. We're going to take it to the scoreboards. And if you are here for the first time, the scoreboards are simply the three major indexes, the S&P 500, the NASDAQ, and the Dow. So because we are at the end of the month, I'm going to take a look at the month of October's performance. The S&P 500 closed above 2% for the month of October. The NASDAQ, the tech-heavy NASDAQ, closed just shy of 5% for the month. And then the Dow closed up 2.5%. So not bad. So right there, we look at the overall market, we can see October was a positive and productive month for stocks. Okay, so what happened this week? Well, we had 5 earnings reports from the big mega cap companies of Amazon, Apple, Meta, Microsoft, and Google. So because it was the latest and my favorite because we had a nice little lick on options trade. Again, a reason for you to jump in the options. We had a nice little lick in the options trade. The close, yesterday's close, our contract was up 8%. And this morning when we woke up and opened the bell, it was up 120% plus. So That is the power of options trading. You can definitely watch the video. It's an hour-long video on Options 101, learning the basics. It is in this playlist, the All in Society Investing playlist. You can join, watch that video, join the Patreon for free, and then when you're ready, jump in for the paid membership, and we'll get you ready. We'll get you ready. We'll get you busy. We'll get you into options trading ASAP. But don't forget, long-term investing is our bread and butter. We always suggest start with a long-term investing portfolio. Once you start getting comfortable managing that, then jump into options. You don't have to be in a rush, but your frame or your foundation should be long-term investing. You can invest in ETFs. You can invest in individual stocks. But once you get comfortable doing that, you have built yourself a nice little portfolio. You understand how to research the companies. You're not, you have control of your emotions, and you're not watching the stocks moving up and down. Even if you do watch the stocks moving up and down, it's not, impacting you emotionally, making you want to buy more and fear missing out or sell because it moved down a couple percent. Okay. So once you get, a little bit of time underneath you, a little bit of experience with you, then you can jump into options. Or if you're somebody that says, no, Claude, I'm not waiting, I already got some long-term investing, I'm here for options, or I'll get to long-term investing soon. That's all right as well. I just want you to understand what you're getting yourself into. This game isn't for everybody. It is not for the faint of heart. But if you are somebody who does the research, you build confidence, you put your money into work, and you're not emotionally swayed on something that might happen in the short term, then you got the right idea, and you'll definitely make money in this market. But I did want to talk about the big tech companies. We want to talk about Amazon first. Just look over the past week. Shares are up just about 9%. Now, that's a hell of a week for a company like Amazon that does not make moves like that very often. As you can see, the close on Thursday, shares are at $222, and then they closed at $244 this evening. So that is a very, very nice return in one day. But why Amazon stock was up after its earnings report? Well, of course, the one thing that everyone's looking at, yes, they have the retail business, and everyone understands that, and Prime and their the subscription. But what is the major growth driver for Amazon and what investors are looking for and the analysts were looking for was AWS, its cloud business, and they wanted to see growth, specifically 20% growth or higher. And that's what they got, and that sent the stock much higher. If you remember Oracle and their partnership with OpenAI, and then that company skyrocketed as well. This is kind of the same thing. And Amazon is a leader in its cloud infrastructure. In the cloud business, they are the leader. And so when you see someone who isn't even a leader like Oracle jump off because, it was kind of unexpected, and from a company like OpenAI to go with Oracle opposed to Microsoft or Google or Amazon, that really excited investors. But it's always best to invest in a leader in the space, and Amazon is a leader in the space, and we can see why here. All right, moving on to the next is Apple. And Apple has been on the chair. Just in the past month, Apple is up 6%, but this week up just under 3%. Now in Q3, which is the prior quarter that they reported on, they missed iPhone revenue. But a lot of that is the fact that they only had 1 week of sales for the iPhone 17 in that quarter. Pretty much the bulk, if anything, of iPhone sales is going to be in Q4. And that's why Tim Cook kind of gave us guidance that Q4 was going to be an excellent quarter because iPhone 17 sales have been off the charts. Not so much for the iPhone Air, but for the base model, and then for their top high end models for the iPhone. But this is I wouldn't call it a super cycle with all the analysts are calling it, where everyone rushes out and gets a new phone. But the iPhone is doing much better than anybody anticipated this year so far. Now, let's go over to Google and then we'll talk about some of the companies that disappointed. Now, Google's been on a tear as well. For over the month, it's up just under 16%. And in 5 days, it's up 8%. After earnings, they're just continuing to execute. They had 100 billion in revenue in Q3. That is the first time and a new record for them. They're beating the top and bottom. Their cloud business is looking good as well. A lot of people there's whispers that they might be partnering with Apple. Apple rolls out their Apple Intelligence and blending Gemini with Apple somehow when Apple Intelligence is released. So there's a lot to like with Google. When Google was underperforming vast majority of the year. Now let's talk about some of the companies that disappointed on earnings, and we can start with Microsoft because that was a little bit more of the mild version. Now Microsoft is down 1% the past 5 days, so nothing much whatsoever. Their cloud business was doing decent, but they spoke to elevated spending and elevated spending in order to meet demand. And but they're still growing. We still see a lot of growth in the company. It's just kind of one of those quarters where high expectations and they didn't blow investors or analysts out of the water. So just kind of a lackluster report. And so you got the price action that we got. This might hit that $500 level again. I believe that's where I was kind of accumulating shares not too long ago. And we'll finish with Meta. And now their business is still doing well. But again, they spoke to elevated expenses and projections for the AI build out. And, they saw a lot of, daily active users. I believe those rose in all of their suite of apps. Engagement, it was up, I believe I saw as well. But maybe they couldn't speak to what the investments in AI is doing right now to revenue as well as others, because others are raising their expenses as well. So it's kind of, well, why is Meta getting beat up so much opposed to like Microsoft? They elevated their spending, but we didn't get Meta was down 12% in the past 5 days. We didn't get that type of result. A lot of it's probably because Meta was doing really hot first half of the year, and maybe that just had to come down a little bit. Maybe expectations were a little bit too high. Again, maybe we're looking for a blowout quarter, and that's not what we got. What we got was a decent quarter and rising expenses. So when valuations are high, you have to execute, and you have to show, you are providing some type of return on your investor's investment. And we've been through this with with Meta before, with the metaverse and spending. And then they finally turned that around. They were talking about the year of efficiency, and they talked a real good game, but they also had the results. And I think Meta brought in that super intelligence team. They stole a lot of good people from other companies, and they're paying these people these high salaries. And so I think it's going to be a little bit of time to let that team, kind of work on what they need to work on and put out what they can put out in time. And so I think that they'll be just fine. This is kind of I'm going to have to kind of eat it as far as my options, not necessarily take it as a loss, but be patient with Meta. And this is more of a long-term play as far as buying rather than options. And so if you don't have any Meta and you're watching Google and say how Google went off, well, this now is your opportunity to get Meta. Everybody should be buying shares of Meta right now because it's at a discount. And 1 year, 2 years from now, this stock is probably going to be $750, $800 stock a year or two from now. So it's just a matter of being patient, let Zuckerberg and the team execute. I still believe in them. They still have the best, ad business out there. Um, you know, their AI maybe not be the best out there right now, but let this team execute, let it work, and I guarantee that we'll see the results. Just be patient with this one. Don't go too crazy. Okay, so that was the earnings this week. So I just wanted to touch on some of the companies that are reporting next week. Uber, and we've been talking about them for the past couple weeks. This stock, I believe they're going to have a decent quarter. This stock is going to be $100 stock within the next 6 months for sure. I believe next week it's actually going to close above $100. We've hit $100. We just have not closed above $100. My projection is after earnings next week, we'll get that close above 100. Robinhood, now their shares are up quite a bit this year, up 293%, almost 300% this year. So heightened expectations, but Coinbase had good results. I believe they reported earnings, and crypto business is doing good there. And probably the trading and everything with Robinhood is probably doing good. Plus, we got the quarter where they were talking about these event contracts. So we'll see how that is helping their business, what kind of revenue they're getting from that. Probably nothing substantially, but we'll see. I think this is kind of like one of those Meta and Microsoft earnings reports. If they don't blow it out, this thing is going to pull back for sure because it's up there. It's pretty elevated, right? DraftKings, I've been talking about DraftKings for the past month. And I've been getting crushed, but I've been saying buy shares as it falls. Yes, we're kind of buying a little bit of a falling knife, but if you waited till this 52-week low essentially to jump in, great, more power to you. I didn't have the patience because I thought when it was selling off, it was overdone. So I was buying after those big sell-offs, and I'm continuing to buy. Nothing crazy or substantial, but I'm pretty sure I have very close to 200 shares now in this company, plus options contracts long out, because I think this is going to turn around within the 6 to 12 months. But if you're not familiar with what's going on, we were just talking about Robinhood, but once they launched the event contracts and prediction markets on sports betting, there was information provided by Robinhood on X saying the amount of business they were getting. And a lot of people were believing that we're taking business from DraftKings or FanDuel, which is a leader in these, these online sports books, or these traditional sports books, if you can even call them that anyways, or anymore. So that initially sent shares lower. And then we got the NBA scandal. That sent shares lower. But then we get a little bit of a rebound when DraftKings said that they were actually purchasing Railbird, so they're going to be able to be offering event contracts. I believe they're going to have a new app called DraftKings Predictions, and so you'll be able to actually do your betting just like event contracts and prediction markets with DraftKings. So that rolled out, and then probably they announced this before because later in the week, Trump announced on Truth Social they'll be allowing event contracts on their platform as well. So it's just going to be one thing after another. But I'm hoping the CEO, I think it's Jason Rollins, is the name of the CEO. Hopefully he speaks to these prediction markets, what they are and what they're not. Are they actually taking share from the business, or will they be able to back out and see where majority of the customers coming from? Are they coming from California, Texas, which are unregulated states, or are they coming from all over the place, the customers? So look, it'll be great. I'll be listening to that earnings report from start to finish and understand exactly what's going on. Because if he can't tell a good story and tell us what's going on, that I don't want to know what's going to happen to these shares even more. But we're already at a 52-week low, so how much lower could it go? And then MP Materials, I've talked about this, made videos on this company. I'm not going to talk about it very much. It's a small position in our portfolio, but if you want to play on rare earth minerals, a US based company, and if you're not aware, we are very reliant on China as far as our rare earths. Rare earths are very important as far as technology, like in our cars, in our cell phones, I believe, like your semiconductors. So rare earths are extremely important. And when China President Xi said he was going to restrict exports, this company, which already shot up, the company is already up 300% this year. Um, but when China said they were going to restrict rare earths, this stock went from kind of where the level it is now to ran up to about $100, and then it's came back down to this level again. And so I've just been slowly adding because this is a national security issue. We do need this company, as well as we'll partner in with other countries as well to probably um, get from under the umbrella of China relying on them so much. But this company, MP Materials, the US has invested in and has an invested interest in. And so I believe this company over the long term will do pretty good. We'll probably get the $100 a share again. Probably not too long as we get a decent report here and they tell us things are moving along and provide a little bit more information. But the stock is up quite a bit. Just be careful here if you're playing this company. You can definitely get bit as I'm getting bit, but again, it's a very small percentage in our portfolio, so we're not getting hit too much. But that's pretty much it. I know I haven't talked to you guys in a couple days since I was out of town. Was in Vegas. Just got back yesterday, but I'm heading back out Monday. So if I'm not able to make the frequent posts, it's because I'm out there busy going out there for a poker tournament. So hopefully I can do well. Crossing my fingers. Send me some good luck. But you could also follow this page, like the video, share the video, and I will see you in the Patreon. Until next time.